Hey, everybody, on this episode of Room for Seconds, Jimmy, the finance guy from Branded Hospitality, drops some huge news that's going to shake up the industry. You don't want to miss it. Go ahead and click the watch button now. Hey, everybody. Welcome to an episode of Room for Seconds. This is take 2 of a conversation that I had with Jimmy because somehow I was in the Branded studio and it did not record. So we are doing it all over again. So Jimmy and I may change what we were originally planning to talk about just a little bit. But hey, that's the way the game goes. We've been doing this way too long.
By the way, I love how Branded got blamed for the audio issues, which probably is true since it was our studio. So I guess the blame is appropriately placed.
I already blamed my team. I'm like, you can't figure out a way to do this.
Well, take 2. By the way, room for seconds, and this is our take 2. I love it.
Take 2 on this one. So everybody, just for a quick rundown, Jimmy, you are the finance guy at Branded Hospitality. What is exactly Branded Hospitality for everybody who does not know, even though you guys have millions and millions and millions of subscribers everywhere?
You're taking a page out of Shatsy's book. I always like to tell Shatsy, my co-founder, and he's our restaurant guy, to leave the numbers to me. Branded is a agile platform, but specifically, what does that mean? We are first and foremost an investment firm. We have a history, 3 decades of owning and operating restaurants, but Branded Hospitality is an investment firm that is focused primarily on what we say is operator-centric technology, tech that is good for operators. We consider ourselves most importantly an ally to hospitality operators, and we think in this current environment the digitization is critically important and that you need to leverage tech for operators to help operators win. We also, in combination, have a solutions platform, which is a intentionally amorphous word, but it's the idea of services that we can deliver to help accelerate our young companies. Capital is important, but capital doesn't solve sales, and sometimes you need some services, go-to-market strategies, or even capital raising, capital markets to help these companies advance. And then finally, I admit what started as a marketing effort has become a really wonderful and truly joyful media platform. Our own podcast, of which you and some of our other good friends have been guests, our own with 100,000 subscribers, not millions, but we're on our way. A newsletter that started out as a team email has now over 70,000 subscribers, and we are a prolific event arranger, hoster on behalf of a myriad of other companies. So we're an investment firm that also offers advisory work and a media platform. That's a lot, but I'll tell you, I'm having the time of my life, and it creates a flywheel that I really get to enjoy, and I really enjoy what I'm doing.
Well, that's awesome. That's the most important thing in what we do, is that you enjoy it, even when it gets a little dark and scary at times, which most people don't realize how hard starting a business is. So they don't understand the fact that there's actually bad times as you're trying to get things moving.
Yeah, I think the word entrepreneur is truly loved, and it should be, and I think it's a word that people embrace. I also recognize that the super vast majority of folks maybe don't recognize that it also comes with no off switch. It comes with certainly challenging times. And for me, I actually think of what I do, and I'd be surprised if you would disagree with this as an entrepreneur yourself. I think of all of this as a cerebral sport. Sports are really fun to play, but to play at any high level, you're gonna have to put in the work, and practicing every day and 2-a-days, and the pain that goes into being prepared to go play at a high level, and the losses that you achieve also in sports. Very rarely does someone go undefeated. So the fact is, I think of this as a cerebral sport. I love the sport I get to play. It is absolutely, there are challenging times, there are difficult decisions, and but how lucky am I, and how lucky are you and our friends in this industry who are entrepreneurs who really do get up every day and enjoy the work that they do. So for me, it's a cerebral sport, but you're right. There is no off switch, and there are challenging times, but that's what makes the highs just that much higher.
Without a doubt. I agree completely. So I got in my hand a press release that went out today.
Fresh off the presses. News. You think we scripted? You think we scripted our timing today with the press release? That's not true. That is truly coincidental.
So, because it was not on the first episode that we lost somewhere in the dark web. But I have a press release today that you guys made a major announcement that you are out raising a new fund. You want to go over what the press release details and what the big news is?
Sure. I'm really excited, and this is a good day. These are, when we talk about the challenges being an entrepreneur, and we also talk about the successes. And look, a press release is not a successful anything. It's an announcement. But how exciting it is that we get to do this. What are we doing? Branded has launched on its own and closed. We have 2 closed-end funds. We've done 14 SPVs, which is special purpose vehicles. Think of those as funds of one. And we also have 2 separately managed accounts. So, as I said, active investor in the early stage space, 54 investments, with the super vast majority of them being in B2B SaaS. And we do those other things we talked about. Today's announcement was the coming together, Branded, who is exclusively focused on the hospitality space, on the food service space. That is all we look at, partnering with Everstar Asset Management, who is a substantially larger manager, more diverse in the industries that they focus on. They have caught the bug of hospitality and the digitization and the modernization that's going on. They've been a close partner and friend to you, Gregg, and Craveworthy. And I think that is the connection between Everstar. It's not like we found them or they found us. You are the connector here of a group that you've been working closely with. You've recommended Branded get to meet Everstar. We are bringing what I think is our hospitality tech expertise. We are working closely now with Everstar and their fund management platform, the infrastructure, the reach that they have, which I respect is deeper and broader than our own. And then, 3 is a magic number. And the third leg of this stool, and really the key part of this stool, is Craveworthy. And a key part of our focus is our capital raise, and we'll stay somewhat clear of that for all the right compliance reasons. But we've been super excited about what Craveworthy's doing. Over 200 units. Well, you can talk about Craveworthy, but the fact is, what I love is this flywheel. What is the flywheel? Tech needs to be associated and closely linked to operators. Who is the fastest growing operator right now? Who has developed in a short period of time 15 brands covering a wide range of segments of the hospitality market? No one more so than Craveworthy. Also, you've embraced the digitization. You embrace tech, whereas I admit a lot of other restaurant owner operators still are maybe falling a little guilty, respectfully, of I want to do it the way I've always done it. And the way we've always done it, and you and I have been in this industry a long time, sometimes you do need to modernize. And let me rephrase that. If you're standing still, you're falling behind. And I think everything you've done at Craveworthy has demonstrated that the core, your DNA of hospitality is intact and getting better. Knowledge is cumulative. You're getting better at what you do. Everstar and Branded, as investment managers and investment focused, are now leaning into your subject matter expertise and your embracement of tech, and that's the coming together. And I know that was a longer explanation, but really excited that Everstar, who we think is an outstanding tier 1A player in the investment space, Branded gets to bring, and I won't rate myself, I think we've done a really good job, and I'm proud of what we've done on the tech side. And then we get to work with one of the fastest growing restaurant operator brand builders who is embracing tech and innovation. And it's not unintentional that I'm wearing my Ovation hat, not because it's one of our core investments, but it's a tech, for example, that you've embraced. And that's kind of the flywheel that I love. Your restaurants will be embracers. You'll use what you feel is best. But I love that there is an absolute CEO of a growing restaurant company that's embracing tech enthusiastically, not presenting resistance to the modernization and digitization that's going on.
I'm Gregg Majewski, and I've been a multi-unit operator for 26 years. I know how great it feels owning the right franchise brand, but choosing the right franchisor feels even better. At Craveworthy Brands, our hospitality-driven culture sets us apart because we're invested in your success at every single stage of your journey. We're operators alongside you, paving the way forward to give you a head start on greatness. Start your franchise journey at craveworthybrands.com. When a restaurant company in particular, and there's a couple big giants out there, and I call them out for it all the time, they buy tech to make sure nobody else has it. And then they develop it in-house because they want that upper hand. The restaurant industry is not built on that type of foundation. And until you get to those enormous sides on those big groups, we all buy off the shelf tech. So the fact that we're not all working together as a collective group to make tech better for us, then we're failing. And so I have this argument all the time with the bigger people in the industry. You guys go and get this. You think it's okay now, but you don't put the money in to continue to develop it. Then you go and try to poach the tech from somewhere else to stop others from getting it. That's a negative on the industry, because if we all can't be successful, then none of us are successful. And people will argue the fact that, oh no, if there's less restaurants, our restaurants do more. It doesn't work that way. When competition is good, people go out more because they know that their meals are going to be great. If they only have Chipotle and Taco Bell, they're only going to eat there once or twice. You know, you're not going to get the 3, 4, 5, 6 times, and then you're going to let grocery win. Why the hell do we want grocery to win?
You know, I'll extrapolate from that point, which I thought was a great one. I've seen many large restaurant groups really beat up, we'll call it the emerging tech, on price. And there's famous stories about, and that's not even exclusive to our industry. A maker of a certain type of glass might win a great contract with one of the world's largest, cell phone companies. But it's almost they become so dependent on that one order, and the pricing is so somewhat punitive to the company making the glass. And in my little example, you just said we want these companies to get better. If you can buy tech off the shelf, if tech is available, ready-made off the shelf and solves your issue, then I suggest people go do that. A lot of the emerging tech is because something off the shelf isn't delivering the necessary value to the operator. That's what creates the opportunity to build and develop the tech. And we want those tech companies to continue to build and develop functionality that's good for the operator. When you go with these tech companies and you beat them up on price, what you're basically forcing them to do is maybe stop developing, maybe stop paying for the right talent. You're actually hurting the very tech that you went out and sought after. So again, I recognize a lot of people want to compete on price, but I also am encouraging operators. We all want fairness, but when you find that right tech company that's going to be an ally to your business and help you grow, scale, be efficient, take on challenges that you otherwise, couldn't solve for without them, to beat them up on price is to actually, for lack of a better cliche, bite your nose to spite your face. You want that tech company always staying current. And if you don't let them earn, they will not be able to do that. So I really love what you said, and I know I took it in a different direction. I'm the finance person or the finance guy, so I went right to don't cut these guys off at the knees, cut these people off at the knees. Let them continue to build and develop and stay the best-in-class tech that you actually embraced them for in the first place.
How do you decide what tech to invest in? What's the process? How does somebody pique your interest?
Yeah, look, I cut my teeth in this industry decades ago as an underage barback and then bartender, and I admit I left the industry. And I left it because I didn't see a career for myself. And I went, I came out of college and I joined an investment banking firm, went to graduate school, and then had a run working for particularly large European banks, and then ultimately in the investment management world. I love the industry, and Shatsy and I, my co-founder, he and I are approaching 40-year relationship. And I joke that we've never liked each other. No, we are brothers from other mothers. We have a third friend, a third partner I went to high school with. Shatsy and our partner Dean went to college, and we've all been friends a long time. Shatsy was our restaurant guy. Dean's in the real estate business. I'm in the finance business, and we started backing Shats to open and operate restaurants. Fast forward, and now leapfrog. Shatsy was telling me he was an avid tester, beta tester, and explorer of early stage tech, but only from the perspective of an operator. He'd look at tech, beta tested OpenTable and Relay and Goldbelly, Harry, and I can go on and on and on. I know I'm disrespecting many, but he would constantly look at tech for the benefit of being an operator. We didn't have an investment thesis. Fast forward, here we are now with Brand Hospitality. How do we vet tech? It starts with our SMEs, our subject matter experts. We're a very fragmented industry. If somebody approaches us with tech, the first lens that Brandon looks at it from is our operator who would be a user of the tech. We often tell technologists, you don't need to give us a demo. We'll get our own demo by leveraging our operator network. We need an operator to tell us that what this tech is doing is really important and they would use it. In fact, one of our restaurants on the Upper East Side, while that restaurant closed when the lease was up and the building sold and the walk-ups became a high-rise, that one restaurant helped us identify 4 technology companies, 2 of which have exited, Bbot to DoorDash, GoParrot to Square, and the other 2 companies are Pour My Beer, the self-pouring beverage company, and Chowly, which has done incredibly well. I remember specifically the manager of that store said if we ever got rid of Chowley, he'd quit. We were just a user of Chowley. But that testimonial from that manager convinced us that we had something. So always long-winded, and I apologize, but it starts first and foremost with an operator telling us that what this technologist has done is not only important, but they would pay for this service. Then we vet it from a financial perspective. But to be clear, my role and my finance team and the investment team, we are second. We are on the right. For those in the finance game, lead left is our experts, which is not me, it's Schatz and the team of experts we leverage. And on the right, only after the experts say yes, does the financial team and the investment team dig in to understand whether or not this is something that is being priced right and the model works and the projections we think have a chance of winning. But it all starts with the experts vetting the tech. Would they pay for it? Is it important to them?
And that's the most important part. It's not, if a restaurant guy doesn't think it's good and they're not going to use it, then why do it? And there's a lot of that out there right now that we all look at and we question, hey, do we need to, in quick serve, need non-pay for people that are walking out, or fast casual or stuff like that? There's tech that's trying to change our industry. They think they're solving a problem, but the problem may not be there yet.
We see a lot of tech that we refer to as a solution in search of a problem. It's an expression we use. And I see often, I would stipulate, and I recognize I'll make a bold statement and people can disagree, but I'll stipulate that the hospitality industry is one of, if not the most misunderstood industries that I've ever been part of. Why do I say that? 10% of Americans have worked or work in the industry. Thus, 90% don't. I would argue that people project their guest experience onto a restaurant and onto the operations, but having never worked in the industry. I've flown on a lot of planes. I don't know how to build one. I don't know how to fly one. I wouldn't profess to. I've taken my fair share of medications and worked with doctors, or rather been a patient. I don't profess to know how to make those medications, prescribe them, or otherwise. Yet people that are a guest of a restaurant, and we love you, thank you, guests, project their guest experience and what they think is the workflow onto the industry. That has bled into people developing tech that they believe would be helpful to an operator, although the operator has never told them they needed it. And it's also bled into investments, people investing in stories that they think make sense, even though it doesn't fit into the operator's workflow and there's friction. So that to me is the wonderful thing that Branded gets to do. We get to work with experts and vet the tech from their perspective. And that's, I think, what makes us different. And I welcome people to join us in the journey. We're not exclusive about this. We welcome other operators to help us vet and test tech with the idea of helping in advance and investing if they want to.
With that, I mean, that's the exact best way to best answer I've ever heard someone give, actually, in how to define what tech should or should not be, or what you're sort of looking for. So I'm a little impressed there, Jimmy.
Oh boy. Now you're right. I want to raise the bar. I want to have low expectations. I want to keep your expectations low.
So now, as you guys are moving forward, you also started Branded Hospitality. You're now a media sensation, as Shotzi would say, and you got your flocks of fans everywhere you go. Why did you guys go to the media route? What did you see in that sort of path that would help you all at Branded and also help the people that you're involved with?
Yeah. I was going to joke and say, would you like me to tell you the truth or tell you an alternative truth? I think I will show respect to you and all your listeners and tell you the truth. We did intentionally have a marketing effort. We did launch a podcast, and the podcast was a cost to Branded, and our thought was the podcast would allow us to be an ally to our portfolio companies, and we could create some content that we would pay for that would be valuable to our young companies. And that is how it started. In fact, if anyone of your listeners is of a certain age, they may know the company, the fictitious company of Chico's Bail Bonds. And if you were watching movies in the late 70s, you'll laugh and you'll know that Chico's Bail Bonds was the Walter Matthau in the movie Bad News Bears, was the sponsor of the Little League Baseball baseball team that Walter Matthau managed, Chico Bail Bonds, Let Freedom Ring. The podcast was initially jokingly sponsored by Chico's, and that made people laugh if you knew what Chico's was. We had no sponsors. It was a podcast. It was a marketing. It was a cost to us. When we got a phone call about the idea of retiring Chico and would we take on a corporate sponsor because our listener, our audience was growing, we realized that this marketing effort, which we still said intentionally needs to be helpful to our companies, there has to be a mission, and the mission is to be accretive. We realized the audience was growing and we could do more than just help our young companies. So we do have our young companies. When we invest in a company, we usually bring them on and have a podcast, but then we realized there was something catchy or something was catching about our approach to this industry. Our strategy of tech needs to be good for operators, and then we get to bring on some really outstanding guests, and our audience has grown and grown. In fact, I remember one time when a booker called us up and asked me, how does she get her person on the podcast? And I, again, not to quote another old movie, but I thought of John Cusack and Say Anything. I said, you ask. That's how you get on. And now we're inundated with requests. But so we got a little more selective. But at the end of the day, the podcast had gone from a marketing tool into now I call it media, because now there's a lot more intentionality about not just our portcos, but about bringing in interesting guests, senior talent or industry leaders, and letting them engage in a way that I remember Greg Flynn was on our show, and when it was done, he said that was the most unique podcast he'd ever been on. I don't know if that's a compliment. I still don't know, because it might have been, but I will say we certainly feel, we call it infotainment. It should be fun. It should be lighthearted. We don't take ourselves so seriously, but we do take this industry seriously. We take our work seriously. And when we have a guest on, we think it should be fun. But we also believe that we should be dropping some knowledge.
When you have Shotzi and you together, it's hard to get a word in. So no matter what the guest is, it's definitely a little bit harder to have that conversation. It's different. Most podcasts, you're going back and forth. The host listens, and there's not that back and forth. With the three in a room, the conversation goes anywhere. You just don't know. I mean, so that makes what makes it fun, though.
It is fun, and I will say we do look. One of the nicest things, and you've been in this industry a long time, I have as well. Our industry has the great potential and is often so fun. It's hard. If you work on a floor of an opera, you're a waiter, a server, you're a busser, you're a bartender, you're in the back of the house. It's a hard job, but it also is incredibly fun and rewarding, and dealing with people is so awesome if you're into that. On the podcast, we think it should be fun and lighthearted. I also hope that I think we are delivering some really good intel and insights, and that really comes from the guests really joining in and playing along. We have a few bits. We have the Price is Right, and the food service feud, and the quick fire, as Shatsy says, and I play along, the greatest and most popular segment of all the podcasts. Even Joe Rogan believes that, which he doesn't. But we try to have some fun while dropping some knowledge. And I will just say the newsletter started out, honest to God, as a team email on a Saturday, just a note to the small team. And through the power of this mysterious forward button, the newsletter, the email started to get sent around, started to grow, and we realized it was no longer going to be a team email, but it was going to be a Saturday morning read. And it's grown substantially to become really an asset for us, because we now get to communicate with our audience, or rather with our community, in a way that's different. So we really do take it seriously, because we know we're getting people that are choosing to read it every Saturday morning. So it's very serious to us, even though we don't take ourselves so seriously, but we do want to make sure we're delivering some intel and insights if people are going to allocate time to looking at our stuff. And that was the birth of the media stuff, of our media channels.
Yeah, I mean, I read it every Saturday morning, religiously. Now, sometimes I fast read, sometimes but yes. I open it every Saturday.
One of our very good friends in this market, a member of our tribe, he once told me where he reads it on Saturday morning, and I regret that I can't forget that and not see it. I wish I didn't know that. And every time I send it out and he tells me, he writes me, and I'm like, do not write me from where you're reading this newsletter. Please wait till later. But yes, I know where people read it. In bed is fine. At your desk is fine. I don't want to hear anything else.
I don't even want to know who said it, but I can imagine. I'm pretty sure. So, all right, last question. Industry trends right now. Obviously, the industry is struggling, and coming back, you hear mixed reviews on who's doing well, who's doing not. Bankruptcies have taken over the conversation. Most restaurants, some major players have had some major issues. Where do you think as a finance guy, where do you think things are going in the next 12 to 18 months? What should people be prepared for?
Sure. And look, I think the restaurant right now, our industry it's almost living two lives, feast or famine. On the one hand, yes, bankruptcies are up. It is a tough industry. We as operators are facing, or you as an operator specifically, rising labor costs, rising food costs, still some supply chain, although I think the supply chain is working itself out, but still prices have gone up. We have stretched the consumer. And there you see the failures and the bankruptcies are up. It's not the urban myth of 90% of restaurants fail in the first year. That has always been an urban myth, but our failure rate is up. At the same point, highest sales on record for the industry in 2024, crossing $1 trillion and projected to be increasing and raising the bar further by 5%. So the sales are up and bankruptcies are up. Those are two conflicting or incongruent scenarios. So what does it mean? First of all, people are dining out, eating at home less, cooking at home less. So there is a great demand for the services that we deliver and the experiences and the meals. We are at a high point of that. I do think that our industry has a saturation issue. There's going to always be a lot of restaurants. I do feel that every time it's somewhat of a zero-sum game. If someone eats at Cava and they're still a somewhat new company, that's a meal that they might have eaten somewhere else and they're not. So you have to recognize that every time there's a new emerging player, Craveworthy would be a great example. Every time someone eats in a Craveworthy brand, that's a meal they're no longer eating at somebody else's restaurant. So while we're a very competitive industry and we're a very friendly industry, it is competitive. So my belief is this is going to be a very exciting year for 25. I think we're going to see some consolidation. You're going to see it among restaurateurs. You're going to see it among technologists. A lot of point solutions or features that do one thing, I think they're going to have to really consider joining and becoming part of a platform, because hospitality operators, and that's who I listen to the most, they don't want 20 ISVs, independent software vendors, ISVs. They would like to have a one-stop shop. I don't think we're going to get to one-stop shopping on the tech side, but clearly we can consolidate and bundle solutions that allow it to be less friction, less training, less billing, and more seamless and better for the operator. So I think on the tech side, you're going to see some consolidation. On the operator side, I think you're going to see some of the same. Why? You could share that overhead. That corporate overhead could be stretched a little further, or there's leverage in you can expand the corporate overhead to cover a greater number of units and stores. So I think we're going to see a lot of M&A activity. I already hear the political environment is leading that. I'm leaving politics out, but I will say there is a sense of enthusiasm for the consolidation and for M&A, but I will tell you that capital flows are still tight, and at the end of the day, that is the fluid, the oxygen that makes these things happen. So nothing is easy, but the failure rates make great headlines, but I believe the sales and the record-breaking sales and the new players that are emerging deserve equal billing. So we are living two lives, and my comment to the market out there is, if you're standing still, if you think you can do things the way you've always done it, I do wish you luck. I think you're you're going down a dangerous path, because I believe once technology is out of the bottle, it doesn't go back in. And therefore, I think we should be embracing it. We're not a tech business. We're a people business. We're a food and beverage business. We're an experiential business, but we can be tech-enabled. We can be tech-supported. And I think the operators that lean into that are going to be the ones on the winning side of this ledger. And unfortunately, those who are reluctant for this, let's say, modernization and change, I think are going to find themselves on the short side or the weaker side of the ledger.
Agreed. Completely. I think the industry is going to have a very rough year. And again, interest rates and everything else are going to play a very, very big part in that. And just the fact that PE's been in their deals for so long that you're going to see a lot of PE companies not want to put additional funds into things that they're in because those funds are dried up. I don't think everyone always thinks that going and running to a PE group and getting all this money is an endless supply of cash that comes in. What most of us as restaurant operators did not know or are starting to see is that these PE investors have a timetable. And COVID pushed that timetable out even further than what they typically would. So now these PEs have to decide, hey, funds closed, I made my money. Do I continue to invest in something that is done? Or do I go ahead and force a sale before we typically would? It's going to happen a lot. Is how we've gotten to several of our deals this year, is that PEs have said we're out, even though they have great brands and great DNA and everything else. They just didn't want to wait the next 2 years.
By the way, that structural, what you just articulated is such an important factoid. These private equity funds are 10-year legal instruments, vehicles. They have a maturity date where the money needs to be returned. There are typically extensions, a 1 year, maybe you could do that twice. At the end of the day, these funds have lives. And to your point, they're diverse funds. They're not going to keep reloading into companies that are long in the tooth. It doesn't mean these are bad companies, but it does mean their financial support has run its course, because structurally, these private equity firms are expected to return that money and move on to the next fund, the next investment. And I think that does create a wealth or a myriad of opportunities. And I keep looking at this when I say flywheel. I'm loving how many family offices are getting involved in our industry now directly. Corporates themselves are now leaning in and figuring out how to strategically and synergistically. And now restaurant operators are thinking about, as we experienced, we had a very profitable store on the Upper East Side of Manhattan. We're going to make more money on the tech we identified with that store respectfully than we ever did on the store. That wasn't the purpose of the store. But God bless us, or thank goodness we figured out that we could do more with that store than solely, create experiences and sell food. We figured out that we could do more than that, and that's really become that experience has proven to be very helpful, and really the birth of Branded Hospitality Group.
Without a doubt, very cool. With that, Jimmy, where can everybody find you, follow you, and get in contact with you?
Sure. I try to be an open book, as unfiltered as possible. Jimmy at brandedstrategic.com is my email. Brandedstrategic.com is our URL, and I'm very proud of the work we're doing on the Hospitality Headline, the newsletter, and the Hospitality Hangout is our podcast, and easy to find on LinkedIn. But super excited as I'm going to close out. I will say the timing and how fortuitous it is to be recording this with you today, on the same day that we made an announcement that I think is really meaningful. And I'm psyched to get to work, because I think this is the type of thing we've been working for and building towards, and now we actually go get to execute. People make plans and God laughs. We've made a plan, and now I'm excited to see what comes of this. I'm really excited by it.
Now we got to hope God doesn't laugh.
I'm gonna hope God doesn't laugh. But we got a plan.
And again, this was supposed to be in the tank weeks ago. This was not planned. It just sort of happened to work this way. We're very, very excited about what the future is going to hold. Everybody, hit the follow button. Go ahead and subscribe. Jimmy, thank you again for coming on Room for Seconds. Don't miss any episode that we have. Subscribe to our YouTube channel and everywhere else. Everybody, thank you.
Thank you, everybody. Thank you, Greg.
Hey viewers, thanks again for supporting Room for Seconds. If you found this episode inspiring, interesting, or any bit informative, please hit that little subscribe button down at the bottom so you never miss an episode. In my 26 years in this amazing industry, I've been blessed with incredible mentorship. This show is my way of giving back. Follow me on LinkedIn, search Gregg Majewski, on Twitter, @Gregg_Majewski. If you still have room for more, visit our website at media.craveworthybrands.com. You'll find more videos, shows, notes, blogs, resources, and an easy way to get in touch with the Craveworthy Brands team. I'm your host, Gregg Majewski. Thanks again for tuning in to Room for Seconds.